Hey guys, I hope that you're doing amazing and that you've been enjoying the holidays with your family and with your friends. And welcome back to the North Investor. So for those who didn't saw my last video, so I did a video about the 5 international stocks that I will be looking for in 2021. So I invite you to go see it if you haven't saw it. It's gonna be just right over here. So in today's video, basically I will present you, in my opinion, what is one of the best ways to create a great funnel of passive income. So a passive income, obviously, it is a way to make your money works for you in a certain passive way. So it means that, for example, when you'll be sleeping, basically the money is gonna work for you and you're gonna create some money. So a great way to do it is with dividend stocks. So you might wondering, but what is the dividend stocks? So dividend stocks, basically, it's a stocks that all is retained earnings will be allowed to first make the stocks obviously grow. So there will be a little part of it usually that will be used for the growth of the stock, and a big part of it, depending on the companies, will be allowed to dividend. So a dividend is basically a part of the value of the stocks that will be given to the shareholders of the stocks. So for example, if we say that I have a stock, I am the owner of a stock of $10 with a dividend yield of 5%. So it means that during the year I will be receiving 50 cents for holding and for basically giving my money to the company. And if the company, obviously, if the stock grows, so it means that the money that I will receive will be even more. So in this case, it's really interesting. It's a really interesting way to create some wealth in the long term and in the passive ways. So it's why that today I will present you my top 5 Canadian dividend stocks that I will be looking for in 2021. So now let's take a look at our stock number 1. Telus. First, I wanted to share with you guys one of my favorite Canadian dividend aristocrats that I do own, which is the company Telus. So Telus is really a great company, not only by the fact that it's one of the biggest telecom company in all Canada, but also by the fact that this company is in constant growth since the past years. And with their recent announcement of 5G expansion all around Canada, it's going to be a company that will be very interesting to look for in the future and obviously in 2021. Plus, if we look at the distribution and the proportion of the Canadian wireless market telecom in 2019, we can see that the market is basically mainly divided in 3 big companies, which are Rogers, Telus, and Bell. And personally, I do invest in the 2 last one, and I'm also thinking about investing in Rogers for the future. In any case, if we take a look at Telus in detail with the analysis of the graphics and the data of the company, we can see that the price presently is around 25.5 and actually it's in 25.71, and right now this price is staying in the between 24 and 26 since I think at least 3 months, so since the beginning at least of November. And this price, it means that right now it's a little bit high if we look at the PE ratio. So for those who don't remember, the PE ratio, which is the price per earning, shows if the stock is undervalued or overvalued with a quick analysis. And I told you in my previous video that a stock is undervalued when it's under 15, but right now it's at 24, so it's not too bad because it's a big company. When we see here, the market cap of the company is of 33 billion, and when the company is 1.5 billion or more, it's a big company. So the company is safe, and right now the price is actually not too high, I would say, but maybe you can wait a little dip before to enter in it. And if we look at the dividend, right now the dividend is of 4.89, and so it's around 5%. And it's important to also look at the fact that this dividend is in constant growth since I think 15 years. So it's been a long time since this dividend is growing. So it's really interesting to look at it. And if we take a look at the financials, so at the revenue, we can see that the revenue are also in constant growth, because after soon I'm actually gonna show you a little article that presented to you everything about the Telus. So the revenue are in growth, but the only thing is that with the COVID and the pandemic, the expenses has also increased. So it means that their net income is a little bit diminished compared to the previous years. But if we go to this article that presents you actually Telus, it shows you that this is an important dividend growth stock. So as I told you, since many years, this company has made their dividend grow a lot, and it compared it to Algonquin too. And actually, despite the pandemic, that's what I was saying, they add more than 277,000 new net customer, which is a lot for the Canadian market. And as we saw earlier, it's one of the biggest telecom market in Canada. And with their recent announcement of 5G expansion in all of Canada, it means that their Wi-Fi and their fiber is one of the fastest in the world and also in Canada. So it's really important to know that. So they're actually the stock in the future will be interesting to watch because of that. Plus, because of the fact that in digital health, it's also a leader in Canada. So it's really something to look for. And as I told you, they pay a great dividend of 5% that has been just raised, I think 2 months ago. I think it was in November that has been announced to raise of 7% for the future. And yeah, so that's pretty much it. And for the price, my price of range, my buy of range for this price, for the stocks, I mean, I would probably maybe wait until it's low, it's in the 25 Canadian dollars or lower. But if you want, you can buy it too at this price, because as I told you earlier, it's a long-term investment. So normally you would be able to do a great profit on the long term. So now let's take a look at our stock number 2, Algonquin. So for the second stock that I have decided to present to you, it's about the company that I've already presented you in my previous video, but because it's about dividend Canadian company, the video today, I decided to include it too in this video. So it's about the company Algonquin, that, as you might already know, guys, it's a company that is aiming for the future and that is working on the renewable energy field. So this company is really focusing on making energy, for example, with the water, with the hydraulic water, with the sun, and also with the wind. So it's really about acts on the future. And if we compare it, for example, to a company like Enbridge, which I will give you a little spoiler, is my third company that I will present you in this video. Enbridge, it's more a company that it will be acts on presently. They will give you a big dividend presently of almost, I think, 9%. And Algonquin is a company that is giving a great dividend of, I think, 3.5%, but the dividend is growing. If we compare it, I think since many years, this company make their dividend grow. So it's really an interesting company in long term. So this company, as I told you, is aiming for the really long term. So maybe like in 20-25 years, there's going to be a big growth compared to presently about the value of this stock. Now, if we take a look at Algonquin, the data and the graph of it, we can see that first of all, I won't enter too much in detail about this stock because in my previous video I've talked a lot about it. But if we take a quick look on it, currently it's trading around 1634, so around the 1650, 1630, around those area. And yeah, so this company, as I told you previously, is considered as a big company. To me, it's my favorite renewable stock in Canada, and it's also a dividend aristocrat because its dividend has been increasing since many years, and presently it's at 3.82%, so almost 4%. And to me, it's an interesting company too because its acts on the future. So we can also see that the PE ratio presently is a little bit high, but it's like really similar to what was the PE ratio of Telus. So it's affordable, but it's not cheap. So it's quite good. And yeah, so if we take a look at it right now, it's at 1634, but it already picked. It was in the 15 area around December 20. So personally, I would wait a drip at 15 before to buy it. And if we take a look at his financial data over here, we can see that the revenue has been a little bit decreasing since last year because mainly of the fact that the pandemic has hit them. So they have had some biggest net income due to the fact that they have diminished their expenses. And if we take a look at the dividend stocks over here, the article, Algonquin, why I find this stock interesting is the fact that, well, actually 70% of its business, as I told you, is mainly focused on three essential, which are water, electric, and natural gas. But the other part is also focused on renewable power. So this is really an interesting company on long term. And with this kind of stuff that they are proposing, it's really important to understand that in Canada we have some great renewable sources of energy that some other countries might not have presently, and that's why Algonquin is going to be pretty interesting because right now they are saying that they are trying to do a green power development partner with the US with Chevron. So this is also another interesting fact. And if we take also a look, here we have the dividend, so it's just talking a lot about the dividend. But even here, it's another article. It's about Warren Buffett that was looking at this stock because in 2021, it said that many big investors might want to take a chance and invest in Algonquin because of the fact that this is, as I told you, it's a company that will be acting for the future, and it's a great way now to enter in this sector. That is, in my opinion, and in some others' investor opinion, and a lot of people, it is the future because we will need renewable energy for the future. And for the third stock that I will present you, it's going to be more an energy about the oil that we need currently. But if we also take a look at right now the price, it's quite affordable. So I would personally buy it. As I said to you, I would say my buy of range for this stock would be below 16. So I would wait a dip under 16 before to buy it. However, as the same for Telus, you can buy it at the price that you want as long as you do your researches. And yeah, so me personally, I would wait until if the stock goes below 16. But obviously, if you have a long-term vision, well, you can buy it at the price that you want. So now let's take a look at our last stock, our last stock, and our stock number 3, Enbridge. So for my third and last stocks that I will present to you today, as I told you earlier, but it might be a surprise for some of you, I will present you the company Enbridge. So Enbridge is basically one of the biggest, if it's not the biggest in North America, a company on the gas and oil side. And this company has really a huge market capitalization, as we will see, but it's a company that is interesting for the present. Okay, so I explain. Because if we compare it to Algonquin, which is a company that is acting more on the future, this company is presently quite undervalued. So we see that the company is undervalued, and they also give a big dividend. So this company, obviously, I don't like the fact that their dividend is a lot based on their cash flow with a lot of debt. But this is another point. But if we look at the payment that they are doing, it's at around, I think, 9% per year, the dividend that they are giving to the shareholder, which is really huge. So when we talk about dividend stocks aristocrat in Canada, I don't talk about Enbridge, because it's one really big company that is giving dividends that is giving one of the biggest dividend in the stocks that are proposed in Canada. So finally, if we take a look at our last company, which is Enbridge, on the datas and on the graph side, well, first, presently today has been a really great and a very green day for it. So it took almost 4%, but it went, I think, from 40 something to 42. So it was pretty good day for them. And yeah, right now with this company, I just want to give you a little warning, because Enbridge, for the moment, as I said it earlier, this is a company that at the moment is really a good dividend aristocrat, and it's giving some great dividend. But in the future, and that's why I picked it with the Algonquin, it's more acts on the present than in the future. So on the future, you should more take some company like Algonquin, but Enbridge does give a big dividend of 8.18%, which is very great, and has a big market capitalization of almost 86 billion, and that's why it is one of the biggest oil company and gas company in all North America. So that's one great company on that side. And the only thing is that also their PE ratio is very high presently, because, well, actually today the value of the stock has increased a lot, so the PE ratio also increased. But the price, if we take a look at the 1 year gap, we can see that in February it was almost at $60, and right now it's at 42. So there's still a gap to climb. But on the oil and on the gas side, let's say that the pandemic has been hitting them a lot. So I'm giving you a little warning for it, because right now you need to watch for the price. And if we take a look at their financial, we can see that their revenue, however, is still climbing up, so it's still growing, which is pretty good in this case, and that's why they are able to pay their dividend. However, the fact that they got this much PE ratio, plus if we take over here the look at their payout ratio, which is almost 300%. So if you remember well what I told you in my previous video, a payout ratio, a good payout ratio is between 35 and 55%, 35 and 65%, and in this case of almost 300%. So basically they are giving more money than what they can earn, which is quite let's say difficult for them, but they are able to do it because of their cash flow distribution. But their debt, they are really using a lot of their debt, which is really huge. And that's the thing that is a little bit scaring me about Enbridge. But if we take a look at the present year, I cannot not talk about this company, obviously, for when I talk about dividend aristocrat, because even here we see that it's been 23 years of increasing in their dividends, which is really good. So this article also show that this company is great, and they are talking about their business model, so that it's one of the big and major company pipeline in Canada, and that it is using a lot of its cash flow to give the dividend. And that's why they are the only thing that I would watch on this company is the fact that they are giving great dividend, and that would be why I would take this one. But always be careful, because they are using a lot their debt. So personally, I prefer Algonquin because it's more long term, and I know that in 30 years I will still have the stocks, and most likely. But Enbridge, we don't know in 15 years how it's gonna be. But I know that for, let's say, at least the 5 next year, and like even more, like maybe in the 10 next year, we still need some oil. And this company is one of the biggest Canadian and North American company. And personally, for my buy range for this company, I would buy if the stocks goes under 40. So it needs to reach the 40 and maybe go under that, because we saw that just today it gains a lot of momentum. But I would wait until it goes a little bit lower before to buy. So now let's go to the conclusion of this video. So guys, I hope that you liked that video, and that the 3 stocks that I've been given to you today will be maybe on your watch list for the future, and that you will take a look at it if you want, obviously. And as always guys, it's your responsibility, and it's really important that you take a look at the investment that you are doing, so you verify it, because it's at the end of the day, it's your investment, so it's your responsibility. And I will give you a little let's say a little spoiler about what's coming up next for the future video, because it's about a project that I've been working on for the past 3 days, and it's about how can you analyze your stocks, so how can you do the analysis of your stocks. So I will give you a little gift and a little basically a little tool to you guys. So it's gonna be a little graph with it that you can basically follow all your investment, and with that you can basically analyze it. So I will give it to you and explain it in the future video. So for all the ones that are news, as always, if you like the video, you can subscribe to the channel, you can smash that thumb button, and you can click on the notification bell if you want to be aware of the future videos that are coming up next on the channel. And as always guys, if you have some feedbacks for me, I'm gonna be very grateful to see them in the comment section. That's pretty much it. Bye bye.